Understanding candlesticks is an important part of traders' capabilities. Let's talk about what you need to really understand about candlesticks. We'll examine the role of green and red candlesticks with long or short bodies to determine market control. But, first, let's consider the differences between long and short candlesticks bodies. Long body. A long body in a candlestick represents a significant price movement between the opening and closing prices within a specific time frame, indicating strong market sentiment. Green candlestick, buyers. When the candlestick has a long green body, it signifies that buyers were aggressive during that period, leading to a substantial increase in price. The closing price is much higher than the opening price, showing that demand was high and buyers were willing to pay a premium for the asset. Red candlestick, sellers. A long red body represents strong selling pressure during the time frame. Sellers dominated the market, causing the price to drop significantly. The closing price is much lower than the opening price, indicating an increase in supply and a willingness of sellers to accept lower prices. Short body. A short body in a candlestick indicates a smaller price movement between the opening and closing prices, revealing weaker market sentiment or a more balanced tug-of-war between buyers and sellers. Green candlestick, buyers. A short green body suggests that buyers had some influence during the period, but not enough to create a substantial price increase. The closing price is only slightly higher than the opening price, indicating a lack of strong buying pressure or a more evenly matched contest between buyers and sellers. Red candlestick, sellers. Similarly, a short red body implies that sellers were present during the period but not overwhelmingly dominant. The closing price is only slightly lower than the opening price, signifying a limited decline in price due to modest selling pressure or a relatively balanced market between buyers and sellers. Now, there are three cases when you see several candlesticks together. Case 1, buyers in control. When you see a series of green candlesticks with long bodies, this indicates that buyers are dominating the market. These long-bodied green candlesticks signal strong buying pressure, as the closing price is significantly higher than the opening price. This bullish trend suggests that demand is high, and traders may expect the price to continue rising. Case 2, sellers in control. Conversely, a succession of red candlesticks with long bodies indicates that sellers have the upper hand. Long-bodied red candlesticks represent a substantial decrease in price from the opening to the closing price, revealing strong selling pressure. This bearish trend implies that supply is exceeding demand, and traders may anticipate further price declines. Case 3, no one is in control. Sometimes, the market may exhibit short-bodied green and red candlesticks, indicating a lack of a clear trend. In this case, neither buyers nor sellers have a strong influence on the price movement. These indecisive candlesticks can signal market uncertainty or consolidation before a potential breakout. Traders should remain cautious and watch for more definitive signals to make informed decisions. In conclusion, understanding the significance of green and red candlesticks with long or short bodies is crucial for interpreting market trends and making informed trading decisions. Remember to carefully analyze these scenarios to recognize which market participants are in control and adjust your trading strategy accordingly. Thanks for watching, and I hope this video has helped you gain insight into the candlestick patterns.